All right. Hello, everyone. This is Dad. This is not financial advice, just the way I'm looking at the market. Sorry, there's been a few misses in live streams the last couple of days. Still getting back into things and sick kids and stuff, and I'm still not 100% myself. So, um, yeah, interesting market reaction today to the Fed funds rate. We got the 0.5 basis cut, which I wasn't super keen on, mainly because it normally leads to a bigger correction. Like it leads to proper recession, and with the way the economy is at the moment, where, in my opinion, they're probably heading more towards a global depression. So we'll just have to wait and see. Depends on how they deploy capital and stuff when they try and dig the economy out. Now, what we don't have at the moment is, the signs that something is properly broken. There's no cracks actually showing themselves in a big way. So it's kind of still expect a little bit of a run up. And if you look at previous rate cuts and things, the 19th of July, I don't think we're in a similar situation to that, just because the economy was heading towards something at that point, right? And they started cutting. The markets went up, which I still expect this sort of thing, like maybe a bit of a correction over the next week or so, but generally up or sideways and up slightly into the election. And then what we get after that will be interesting. So yeah, it could be similar to this, but obviously that reaction there is going to be, I'd be surprised if we get the same sort of reaction. If we go back to 07, 08 and the GFC, the reaction after the rate cut was actually fairly positive over the next couple of months, and then it peaked. And if you look closely, like sorry, just trying to get this into a scale that makes sense. If you look closely, if you compare this sort of run up from 06 into 07, 08, it actually looks pretty similar to what we've got. So it was kind of grinding up. We had a bit of a correction. We had a big run up once we hit the peak of the interest rates, or the Fed funds rate. And then we had this sort of middle correction here, run up, pull back, another run up. So I have a feeling we're going to get something similar to this. Now, that there was only 10 weeks, so nearly 3 months before the market peaked. That kind of aligns with a December, January peaking, which was sort of my thesis a while ago. I have a feeling it's going to take a little bit longer than that, but it really depends on the data and if something breaks. Typically, a 0.5 rate cut means something has broken. They're just not telling us what they think it is yet. So yeah, it'd be interesting. But before that rate cut, we did have a pretty decent drop in the market as well. So if we come over here to the current, same sort of thing. We're sort of meandering up, pullback, acceleration to the upside, pullback, and then we'll see what happens here. But we've kind of got the double peak already. look, I still think we'll get another run up. One of the main reasons is forward earnings and PE ratios aren't super hot yet. They've got a little bit more room to move. There's the leverage in the market is actually at fairly low levels. So it's got a bit more room to move. All we really need to get things to actually start accelerating into a blow off top is a break above this previous high on SPX. So there still might be a bit of bullishness left in this. I think there will be, but it was an interesting reaction to it. If they had a cut 0.25, I expect it probably would have gone probably actually down a little bit further and then run up. I think the market kind of liked the 0.5 in a way. So I just marked off vertically where all the previous rate cuts have been. This one came after the 01 or the 2000 tech bubble. When rate cuts are done on a decreasing market, typically they lead to like the market keeps going without much bounce. Like even here, I think there was still a couple of weeks of bounce, but not much at all. Same thing here. So that's 89. It was actually like a couple of weeks of sideways and then went up again. This one here, again, this was when markets were basically at all-time highs, similar to what we got now, and then it effectively went sideways. I think that might have been an election year, wasn't it? Anyway, sideways and then up. Couple of weeks of down, then went back up again. That was a pretty choppy time for interest rates too, though. So got here, went nuts. Just looking at the peaks, and this is the actual rate, not the theoretical rate. So a little bit hard to measure off, but you get the picture. So it's kind of a mixed bag, but generally within a few months after a rate cut, the market's finding new highs again, or it's trending up. So even this one, a couple of weeks of down and then up, but that's coming off a low as well. See, this one's coming off a high and basically led to more down. What was that? That's 1969. So the 70s was an interesting time too because they had the reinflation, so which we could get as well. And then back 1957, basically just went straight up from there, sideways for a bit, a little bit down, and then up in the early 60s. So it's one of those things where it's something's probably broken, but it's not necessarily going to show up in the charts yet. But 0.5, based on the stats that FX Evolution has shown, generally leads to a pretty big correction. So over the next year or two, you're probably going to be, let's do I reckon we're going to be back probably into these levels here, into 3 to 3,500 on the S&P 500, somewhere in that region. It could go even further. If we get a depression, then you're talking these sort of levels potentially back into the 2000. Imagine that, 2000 on the S&P 500. That would be pretty nuts. Yeah, I mean, thing that everyone will point to is the depression, which basically went 84%. I wouldn't expect that to happen. We've got different levers that we can pull these days, or that politicians and the Fed can pull to change things. So I'm not expecting an 80% correction. I mean, shit's going to get wild. We've got civil unrest and inter-country unrest on multiple levels around the world at the moment. And if something actually, accelerates in that regard and turns into a proper war, typically you'll see downside, and then you want to buy the invasion based on previous wars. So that's just something to keep in mind. But yeah, it's not looking great. Just have a look at this one. Again, I don't know that this would be the same. That's a 50% correction. What's that one? 87. That was they call that Black Monday or something. 23%. These ones here, so that 01, top to bottom, 50%. 07 was 57%. So that's pretty decent. This might not be the top either, by the way. Like it's probably getting up to at least 6,000, I would think, if not higher. Really depends how they manage the issues that they got going on. But from here, your 50% does get you down into that 27, 28, back into this structure here, which would make a lot of sense. 57 almost gets you down to the bottom of the COVID drop again. But, we could go more than that. We could start from a higher bar. But they're the sort of structures that I am expecting to be hit somewhere in the next few years. And it really depends how they manage both the Fed and even global country monetary policy. If they try and spend their way out of it, I think we're going to get a bigger problem than what they think, and it will kick the can down the road. It probably would lead into the end of the 2020s and potentially early 2030s. But there is going to be a massive turn at some stage. So it's just following the charts on the shorter time frames and being prepared is the biggest thing. So let's have a quick look. So Bitcoin's struggling to get through this value area low. Big doji. I've still got 2 hours, but I'm not expecting a huge move on this at the moment. The one thing Bitcoin's got in its favor, it's recovered this vector candle here on the daily. It's retested that 200 EMA on the daily, and it looks like it's gonna, like, if we can close above that value area low, or even above the mid band of the Gaussian channel, close above that, which is at about what's that? Just got to find the right one. Yeah, about 60,680. If we can close above that, then it's looking like we'll get more upside. I would favor the upside very much so. Stochastic momentum is still in the bullish control zone and slightly postured to the upside. And BBWP is still rising as well. So volatility is rising, stochastic momentum still to the upside and in the bullish control. That's pretty good. The interesting thing, the global liquidity is still reasonably low. So there's still room for that to move. And this is why, like, we haven't had any injections really of money into the system. Money's being taken out of the system at the moment. So I don't know that the money or the interest is there for this to really pump and break new all-time highs right now and go on a massive run. But I think once the system breaks and they announce they're pumping money into the system somehow, then that's when I think we'll get a pretty massive run. It's just a matter of when that actually occurs. Now, it'll probably mean the cycle is broken, and you look at the cycle. This happened completely differently. This whole run up. This is completely different to previous cycles. Okay, we started this about the same time that we bottomed in different previous cycles, but this was the run up to the ETF, and now you've got big money in there, and Bitcoin has started trading differently. On the smaller time frames, it's trading completely differently. I had bots that were back testing really good, and shit just changed, and they changed. So, this is something we really need to see. Bitcoin starting to grind its way up, and typically when we go into big pumps, like at the start of these things, we see something more like this, right? So you see this just gradual push up. We're not really seeing that sort of structure yet. It looks like at the moment, it looks like we're still doing something more like this. So I'm a little bit concerned to the downside still. It would be great if we saw this sort of thing happening and stochastic momentum still with a long way to go. Now, we could be here right now. Okay. It's sort of a similar situation, but volatility was a lot lower. All right. So, nothing's ever exactly the same, but it's just something to keep in mind. If we go back here into the start of the last bull run, again, it was sort of this grind to the upside. Hang on, I'll just go to the index. Where am I? There we go. So this is kind of similar to what we had previously, that sort of run up and then it just flatlined. But the real breakout sort of occurred around this level here, and you saw a relatively slow sort of grind up. Okay. We kind of want to see that sort of thing again. And in a way that looks like it might have started, but I'll be a hell of a lot more confident once we get past the mid-band of that Gaussian channel on the daily. And once we clear the lower band of the pi cycle indicator, that the pi cycle indicator is one that I think has probably broken. I'd be very surprised if that is used anymore or usable. same way it was previously. Just going to get rid of these fibs here for a sec. Mainly because we're still below that lower band at the moment. And look, while we're still below the mid band of the Gaussian channel, the lower band of the bicycle indicator, which is the pink one here. And whilst we're still in this channel, Bitcoin's still biased to the downside at the moment. We really need to break through these levels. The only good thing at the moment is we've retested that 200 EMA. That's typically a bullish sign. Okay. That's the main bullish signal at the moment. It looks like we're getting another drop though. And look, most time frames, the stochastic momentum is to the downside still, with room to move. So that's something to be mindful of. Looks like putting in a lower high at the moment. This is pretty gnarly. I think that was the actual announcement was around there. Yeah. Top to bottom, that was a... Geez, that support level's been a good one. Yeah, $1,300 candle on the 15-minute. That's nothing to sneeze at. Would have been a wild ride if I was awake for that. Not a bad move, but yeah, looks like potentially roll over here. It kind of, the market in general, if we look at the NASDAQ, it looks, well, okay. Just go to the futures. Yeah, doesn't look like the market really has responded that well to it. We were coming into resistance, obviously. We mentioned that the other day. But yeah, it looks like we could get that couple of weeks of downside that we've seen after some of the other rate cuts. But honestly, we get a couple of weeks of downside here, then we're probably going to get more upside into the end of the year. It's just whether there's enough interest in stocks and things like that to actually push it to new all-time highs. Like if there's enough money flow into the system, particularly with Bitcoin, you got to see money flowing into the system from somewhere. The people that are already in there and trading it, they're not going to be the ones that push it to new all-time highs. You need some big money flowing in, and yeah, honestly, I don't know where that's coming from. That's the issue. Last time, start of the last bull run, it was basically monetary policy that started it, just giving away free money. Got pumped into crypto and the rest of the market, but that's the kind of thing you want to see. So yeah, look, we were into some resistance. Little bit disturbing that overall on the, let's do the weekly, that basically we're putting in another lower high here potentially. Still got 2 more days to go. So we may push. Well, this is a pretty solid double bottom too if it plays out. that would take us to new all-time highs and 21,000 if we get more upside from here. So I think once all this is digested, there was some positive news in the lead up as well. So home builders, all the real estate related data that came out seemed to be positive. Like there was more approvals, there was more construction starts, and by a fair bit, they seemed to really smash projections. So, with PE ratios still not being super inflated, housing and construction sector seems to still be chugging higher. There still doesn't seem to be any reason for a panic. But it still doesn't look great, does it? So, especially when we have crossed the stochastic momentum level here, could just be one like this, where we find a bottom and head on to the upside. But yeah, I typically don't look at stochastic momentums on the weekly, just because they're a bit too slow at reacting. Yeah, this doesn't look great. What we'll probably see, or what you would want to see, is something like this. Basically a grind up over the next few months. Want to be breaking new all-time highs. If we're breaking new all-time highs in December or before, then the correction could start early 2025. And from memory, based on the timing after a 0.5 rate cut, it's not normally as long after that cut that you actually get the downside, as if it was 0.25. So yeah, market's kind of reacted a bit meh. VIX is back on the way up. Can't pay too much attention to this, but the momentum on it is pretty low. Anyway, skew. Have a quick look at the skew. The skew is pushing up. So the fact the skew hasn't come down, and it probably needs today's. Oh no, that's the reading from today. So skew suggesting that there is more upside. The XLY, XLPs suggesting there might be more upside as well. Loads coming into resistance. The Russell closed slightly positive, but that's a pretty decent rejection candle. Could be seen as more indecision than rejection, but you wouldn't expect them to leave this wick here for too long either. It's a pretty decent one. On a bit of volume too. Equal weight has rolled over a little bit. The fact that equal weight was breaking to new all-time highs is kind of bullish as well. Where's the equal weight? That's it. So the equal weight NASDAQ, it's rolling over as well. I'll have a quick look. So TLT's dropped back quite a bit, which is interesting. high yield. See, the bond market is suggesting that it's okay with everything at the moment. It's expecting stuff to be okay. That's if you're really bearish on this market, you actually want to see this trending down. T 10-year, obviously it's still in the basement. T-year's had a bit of a jump. Copper. Yeah, copper's paused there. Again, it looks like it's trying to make a recovery. Going to be watching them pretty closely. Gold's having a pullback. Gold bounce at 2526 would be pretty bullish as well, somewhere around that level, 2530 maybe. That would be quite bullish, but again, it's still trending up. Silver took a beating, but this is interesting. This is looking like a W formation. If silver bounces here, then we're looking at let's just use that. Now you're looking at getting back up into these levels here, which is pretty good confluence for a move. So silver could be hitting 24.4 British pounds, that is, not US dollars. I think in US dollars that'd be somewhere up around 45-ish. But that, that's a pretty strong move. And again, I would be expecting silver to outperform gold at that point. But silver really needs to turn around here. If it does, then this will push up. The actual silver price will push up, and silver will be the play. We'll see what happens over the next day or two. Next week's probably going to be a big week for the markets. Just to see how they digest everything. Interesting pullback on oil. I didn't really expect that. Not at that level anyway. I guess it did tap into this resistance level. But you'd be expecting a turnaround on oil, I would think. Yeah, turnaround would be interesting from this level. It has, it's testing that lower Bollinger Band there. But it looks like it's closing above I think that's the 4 or 5 moving average there. Yeah. Stochastic momentum is low though, so it's still got a way to go, I reckon. Just bearish control zone, so you got to be a little bit careful with oil. If we come back down and bounce again, we want to see oil peaking. If I see a run up on oil, run up on stocks, I think that's going to really signal the downturn. But at the moment, I don't see this as being the end of the world. Dollar is holding strong, so could be basing here. Dollar starts to pump up. That'll be interesting for the markets. Aussie dollar's strong. Kind of want this trend to continue, I think. I do anyway. percentage of stocks above the 50-day moving average is kind of in the middle still. So there's no real significant read on that. It does look like it wants to roll over, but you can't. I don't really use this for trends, just because you can see here it's choppy the way it trades. On the daily, it's more, okay, did we get to a level where it's turned around from in the past and led to big moves? Not really. That wasn't a big move around that level. So yeah, it's kind of a nothing burger there, I think. Mag 7, again, it's just going to be doing what the rest of the market's doing, but we're also leading into seemingly contraction here of volatility. So it could be, again, it's probably going to be the choppy and sideways, maybe a little bit gradually climbing the wall of worry into the election. And then once the election's finalised, we go. The election will be very, very interesting to see what happens after that. I don't think Trump will win. I think the Democrats have played pretty well in terms of the open border policy, and there's a whole heap of stuff, policies they've brought in which allow the immigrants to vote and all sorts of stuff. I don't want to get too political, but I have a funny feeling that they'll have rigged it sufficiently. I think either way, it's probably going to lead to some sort of civil unrest, and there'll be all sorts of diversion, and yeah, shit's going to get crazy. But we'll wait and see. It could all work out fine. Let the markets tell us where it's going, but at the moment it looks like a rollover. But I don't think it's going to be a full rollover. I think it's just consolidation. If we make a new lower low here, I might change my tune a little bit. There's going to be a lot of support around this level here. All right. That'll do for today. I've got some work to do. I'll catch us later. Oh, actually, sorry. Maybe you're still there. Whoops. Stuff that I was talking about. Oh, one of the core CPI is pretty high for Great Britain. So retail sales was down. Yeah, where was it? Looking at, oh yeah, the housing stuff. No, fuck, where was that? Oh, maybe I was looking at a different news feed. But there was, yeah, the US housing market stuff, the construction starts and things like that. They were quite good. There we go, building permits. So permits issued was up, housing starts was up. So that's positive. It's certainly not something you would typically see if the economy was completely tanking, put it that way. Catch it.